The first query comes in from Mr. Santosh Singh, and in fact, he's on the line with us. Mr. Singh, good afternoon. How can we help you?
Yeah, good afternoon, Sumara. My query is regarding Manpuran. Actually, I'm holding this company from last 3 months, and when the rate was there on 180, then it corrected to 160, and then I bought it. From that time, I'm holding this company, but again, after that, it's correcting again and again. So today, there is some bounce back, but I don't know how long it is. So just want to know the feedback and the future prospect that it will be going to rise or not. So I can hold this stock for 2-3 months more. There is no issue on that part.
Okay, so basically you're an investor, you're just worried about the decline in your holdings. Mayuresh, first to you, he can hold on another few months at best. Is it advisable to do so? Do you think, perhaps a better bet elsewhere might work in that time period?
That can be a possibility. First of all, afternoon, Sumera. So that might be a possibility. But if you're probably looking at the trade stroke investment that the investor has with Manpuran at this point of time, obviously what you've probably seen in terms of the moratoriums announced, in terms of the collection efficiency is actually coming down because of the pandemic. Ever since the lockdown or the unlock measures have got announced, unlock 2, 3, 4, the efficiencies have started moving up quite significantly. Now the expectation largely is that they should hit that 90% mark in the next few weeks. So I think efficiencies will definitely improve as far as the collections are concerned. On the second hand, if you look at their business model itself, the gold AUM, which is almost 70% of their total book, is expected to still grow at around 12 to 13%. Obviously, I think the contraction that you'll see in vehicle financing in terms of microfinance and some stress that can be very, very evident in terms of both these segments itself, provisioning can go a tad bit higher. Now, the recent circular that had come through in terms of banks and gold finance NBFCs, I think gold finance NBFCs already are enjoying higher gold prices, which means that the LTVs that they've already lent to, I think, are at a comfortable position. And from a balance sheet perspective, the capital adequacy remains extremely strong at 21%. ROEs will get dragged down, and that is expected to be the case because of the lockdown pressures and slow and steady growth in terms of disbursements over the next few quarters. So I think it's a good story that can be looked at over the next couple of quarters. 160 has to be taken out with volumes if he's looking at this kind of a time frame, and then probably trail the stop at 160 if it crosses that. However, I think from an earnings perspective, I think pharma IT still look very, very good over the next 2 quarters, both in terms of volatility. So I think something like a Torrent Pharma, something like a Biocon also can be looked at alternatives.
For that, with that we move on to another query. Amit Rathod calls us from Bengaluru. He wants to invest actually it's an SMS that has come by. He wants to invest up to 20,000 rupees in the stock markets, wants recommendations on 5 stocks to buy. Well, that's all that we know about this viewer, not his duration, but we assume that it's a long-term investment that he wants to make. Mayuresh, 20,000 rupees, it's a blank check written to you. What do you do with this, and what 5 stocks do you buy?
Absolutely, Mangalam. And as an ideology at William O'Neill or Cancelim, I think we do prefer leaders in markets. Now, the presumption, Mangalam, that you're putting forth that he is a long-term investor, that with long-term investing, you probably also need to play the cycles very, very clearly. So I think a few sectors move in cycles. We all know that. So to enter the cycle at the right time and to probably get out at the right time as well and pre-enter another sector which is expected to do well or take a leadership position is extremely critical. So in our opinion, I think the beta correlated sectors at this point of time, banks and autos, as we have historically analyzed past crisis periods as well, should show a good amount of a comeback post Q3. So I think you can leave these stocks aside for some length of time. What is doing well right now, I think it's pharma, specialty chemicals, IT, and a few of the consumption stocks. So I think the intent and the ideology has to come out from these quarters itself, because the earnings growth will remain extremely strong with these sectors. So within these spaces itself, something like a Biocon is what I spoke about, or Dr. Reddy's, that very, very strong product profile, biosimilars, for Biocon, expectations in terms of hitting $1 billion revenue over the next few years. They've got the SOTP valuation coming in from Syngene as well, which is their contracting arm, which is expected to do very, very well. And again, the expectations in terms of maintaining margins about 28-29% ROEs at a very, very decent level in excess of 18-20%. That bodes well in terms of our methodology as well. The second element is IT. And within IT itself, I think look for leaders. So something like an Infosys, for example, I think if it moves another 3-4%, I think that will become an exact entry point because a lot of supply will be taken care of. The guidance that they've given, the expectations in terms of utilization levels holding up, EBIT margins holding up between 21-23%, the order book that they've got, that does hold this company in very, very good stead as well. We discussed this a few weeks back, Mangalam. I think paints, within that, I think Asian Paints looks very, very interesting. You compare and stack it up with other players, I think, and it's in fact one of more cheaper value stock from a valuation perspective. The expectations of repainting demand coming back, the expectations in terms of a very, very healthy balance sheet, and again the expectation of GDP rebounding will lead to good volume-led price growth. Leaders, and keep on reviewing your portfolio every year because I think the changes that will happen in the market will also mandate some changes in your portfolios.